Hey everyone, this is Mikas coming at you with another market update video. This is going to be an update on the bullish scenario, as it looks we have broken to the upside with this major pump over here. Although it is the weekend, still it is Sunday, so anything is possible. This could just be one big fake out and we'll be dumping back to the downside. But until then, I will be, taking a little bit more of a bullish approach. As I believe the bearish scenario, or my initial analysis that led to the bearish scenario, is now invalidated, and we are working on this bullish scenario now. So just to kind of review what we did last time. Last time I stated the idea that we're working off of this bigger five Elliott wave drive theory, coming all the way back here to the Corona drop, and we're on that fourth to fifth wave now. The bearish scenario initially was taking into account that we were still forming our three corrective waves between the 3 and the 4, but I do think that is complete now with this pump confirming that. So if we take our corrective waves, from the top of the third to our first swing low down here, our next swing high right around here, and then our last swing low with this wick here, which probably coincides with the beginning of the fourth wave of the bigger picture. So what happens now? Well, after a corrective wave cycle, it goes right back into the 5-wave impulses. So on this fourth to fifth wave, we should expect another 5 wave, or shouldn't expect, but it could possibly come in another 5 waves. So drawing that from the C wave, that's our 0 wave, to our first swing high, second swing low. Currently working on the third wave. I believe that it might hit somewhere in this 10K region, as that trend line lines up nicely along with a Fibonacci extension level that I'll show you, which is this red box. Followed probably by a pullback to if the bulls are really in control, probably this 0.236 level. That's pretty good support at this point. Bounce here, and then we could see this could go to the fully realized target. Maybe it'll stop a little short, maybe it'll hit this region, but ideally it should hit this fully realized target, although I think we will see a little bit of resistance as we move into next week in this area, and this 10.2k region is going to be critical. So I am going to leave my target here for now, as I would probably be taking most of my profits there if I was to play this out. But we aren't currently in a long. I actually just got stomped out on a short that I was holding. I think it was from somewhere around here, hoping that this corrective wave would be a little bit bigger and we would drop into this buy zone where I could flip my bias. However, that never happened. This wick fell short of the buy zone, so this buy zone is now invalidated. Let's get rid of that. This Fibonacci retracement between the second and the third wave is still useful in the sense that it shows us where that 0.236 level is on the greater time frame, which is pretty significant at this point in time, as staying above this means that the bulls are in control. Breaking below this risks bears coming back into control and pushing us down. This was kind of the last little hope for the bears, as we were significantly closing below that 0.236 level. So when that happens for a good period of time, I usually expect to dump off the offset to the downside, but it looks like the bulls did take control and we did pump through there. So I'm gonna hide this for right now, this 0.236 level being the most important region for that fourth wave bounce probably. But let's have a look at how some of the other Fibonacci levels line up. Let me show you where this red box actually came from. So similarly, if we take our Fib extension tools, we can now put in a actual realized target, because we're gonna go from the second to the third, and now to where that bounce for the fourth happened, which is that wick right there, if I can get it. So you can see that sets our 50 to 61.8% region in this 10K to 10.2K region. This red dotted line matches up with a peak of volume resistance, so I did put that in. And that's why I'm very, the third wave could potentially, come up anywhere into here, but since this is our, technically first time testing this region, I would expect a rejection off of it. You could maybe call this third wave a test, although it didn't actually tap it. But we usually don't break these on the first try. You usually get a bounce off of it with a little bit of a correction, especially after a big significant pump like this, followed by some consolidation, and then either get another take at it, break through it, or work your way through it, maybe go up to the 61.8, this 10.2k region. But we'll see about that. But that's where that red box comes from, so I'll get rid of that. Um, so I guess the next thing that we should be looking at is how can we set up some potential buy zones? This is a little bit, I would say, preemptive. Um, but let's take this third to fourth region as the third wave of this five impulse. Is like in very close proximity to it. So if we use that as a marker for right now or as a guideline, and we pull off a fib retracement. Actually, I want to do a fib. Instead of from the bottom side to the upside. I could have just reversed it honestly, but if we go to the upside like that, once again you can see that 0.236 region is going to be a level to watch, that 9.7k, as we could get a shallow. As you can see, we actually were using it for support, not perfect support, but we didn't break below it, meaning the bulls, this is telling me the bulls are relatively in control, so I could see an extension up here to about 10k. The fourth wave pullback lines up nicely with that 0.236 level on the greater retracement. It falls in very close proximity to the 0.5 to 0.618 level. So if we pull this up slightly to that intended or that predicted 0.5 level bounce, things line up even nicer. The 0.5 beautifully comes into contact with this trend line around here. Although this is on the hourly, so price action could spread out a little bit wider. So I would first look, for a breakthrough the 0.236, 0.382, like less likely. But I would definitely be watching a bounce off of this trend line, this purple trend line, or this zone. So for right now, I am going to put a potential buy zone, in this region, in mind, covering a little bit of extra area, as I do think the bounce could happen in anywhere in this region. Let's have a look. What else? Let's have a look at what the MAs are doing. Right, so I totally wouldn't be surprised if we tested this, 10K region, came back down to test the 21 EMA. Could expect a bounce off of the 21 EMA wherever that might be when, the correction happens. So, this buy zone isn't set in stone. It is open to extension or change or shift depending on how the MAs are moving as well. If the bulls are really, in fact, in control, I would expect a bullish kiss, off the 21 EMA on the hourly, 2 hourly. I'd be watching the 21 EMA on the hourly time frames for sure. On the minutely time frame, maybe, but I would, for a more significant, fifth wave pump, I'd be looking for them on the hourlies. So I guess I am going to put my buy zone in there for right now, being between 90, let's call it 96. Let's make it a nice round number, 9600, and I guess 9400. With an invalidation level, stop loss level of, I want to say, let's have a look. It should be around the 0.88. At this point, yeah, I would be pretty safe calling it right at the 0.88. Let's call it 9200. That's a pretty decent stop loss. Remember to use proper risk management. You should only be risking 1 to 5% of your trading account per trade. So make sure that is you are following that. That would line up nicely with the first wave. Well, technically, no, that's a more micro level. Let's push that up here. Yeah, I mean that's valid. I would probably call it right there, because if this fourth wave comes past the first wave, then, or eats up the whole second wave, then it's invalid. So yeah, I would be pretty safe calling it there. Let's get rid of it. Yeah, it was right there. So yeah, 9.2, somewhere around there. Anyway, this is what I'm looking for the near future. I am looking for a rejection off the 10K region. This would be a very high risk swing trade if you're trying to catch the 3 to 4, as this 3 wave could technically fall anywhere higher, as it's very hard to counter trend bet when it is hard in general because you never know when the trend's going to reverse. So the safer bet would wait for a little bit of a correction, especially moving into next week. Check out what the stock market is doing and what the sentiment is looking going into Monday, so into tomorrow, and then make some better moves based off of that. We can have a quick look at the sentiment right now, that's actually pretty interesting to me too. Let's zoom out a little bit. Let's get the 2-day chart going. Okay, so ooh, shorts. Lots of shorts have been liquidated. Okay, so the shorts. Yeah. Okay. Um. So this actually, I would call this just going through a reset. It looks like, sentiment has reset. This would have been very suspicious. This would have. I wish I checked this earlier. I would have gone out of my short earlier. But as you can see, this was a classic example where shorts were, grossly climbing. They were quite a bit higher than the longs, where usually longs are higher than the shorts. Shorts were up, and as a result, we did get this exact push up here. We got this is what ended up, closing out a lot of those shorts, or this would have been expected if you were looking at sentiment, as you would be expecting the shorts to get squeezed. So it'll be interesting to see where this land, and if sentiment shifts, too much in favor of the longs, I will be looking to maybe catch um, that third to fourth wave ride, but that's all open to change. So let's have a look where this bounces. It could very well bounce where we are right now, but that would just change your entry levels and your target levels a little bit. Real quick, if we were looking for target levels, if we did in fact bounce from somewhere around here, but this is now being way too predictive. Yeah, you would expect another bounce around here. Anyway, long story short is let's see where this turns around. Edit, update the wave pulse, Elliott wave theory, adjust the retracements, and find an entry zone for a continuation or a reversal. We'll have a look when we get there. Thanks, guys.